Rivian stock is crashing again. But is this the beginning of the end, or the biggest buying opportunity in EV history? Once hailed as the Tesla killer, Rivian's stock has plummeted from its all-time highs, now struggling at just $11.45. Analysts are slashing price targets, competition is heating up, and investors are running for the exits. But here's the real question: should you? Today, we're diving deep into Rivian's financials, breaking down key ratios, recent earnings, and the brutal reality of its competition with Tesla, Ford, and GM. Plus, we'll analyze whether this stock is set to rebound, or if it's doomed to fade into obscurity. Let's start with the numbers. Rivian's stock has taken a brutal hit, dropping over 40% in the past year. The stock is now hovering at $11.45, down 4.18% just today. But why? And more importantly, can it recover? One major factor: disappointing guidance. Rivian expects to deliver between 46,000 and 51,000 vehicles in 2025, well below Wall Street's 55,000 estimate. Investors hate weak guidance, and the stock price reflects that disappointment. Remember when Rivian IPO'd at $78 and soared past $170? Fast forward to today, and it's a completely different story. But what's causing the downward spiral? Let's talk numbers. The financials paint a mixed picture. 1. EPS this quarter? 1. A loss of 48 cents per share, BUT, that's better than expected. 2. Revenue? 2. $1.73 billion, a solid 32% YoY growth. 3. Net profit margin? 3. Still negative, but improving. 4. Debt to equity ratio? 4. A concerning 81.1%. Rivian is leveraged, and that's risky. 4. Asterisk. So is this a company fighting its way to profitability, or one burning through cash with no end in sight? Right now, Rivian is trading below its 20-day, 50-day, and 200-day moving averages. That's not a good sign. But there's one interesting indicator: its RSI is at 40.27, nearing oversold territory. Could this signal a potential bounce? Key resistance levels sit around $13, while major support sits near $10. If Rivian breaks below that, things could get ugly. But if it pushes past resistance, we could see a short-term rally. Rivian is up against some serious players: Tesla, Ford, GM. And let's not forget about new EV startups like Lucid and Fisker, all fighting for market share. The question is, can Rivian carve out a niche, or will it get swallowed up? Rivian has a partnership with Amazon, which sounds great, but Amazon has also started using other EV suppliers. That's a red flag. And let's not forget about policy risks. If the $7,500 EV tax credit is revoked, demand could take a major hit. Here's where things get really interesting. Analysts are completely split on Rivian. 1. Bank of America? 1. Downgraded it to underperform with a $10 price target. 2. Stifel? 2. Still bullish with a $16 target. 3. Investor sentiment? 3. Shaky at best. 3. Asterisk. With all this uncertainty, what should you do? Buy? Sell? Stay on the sidelines? Let's wrap this up. Rivian's got potential, strong revenue growth, improving margins, and a cult-like following. But it also has serious risks: a cash burn problem, intense competition, and a stock price that just keeps falling. So the real question is, are you willing to take the risk? Let me know in the comments. Do you think Rivian is a future EV giant, or just another hype stock that never lived up to expectations? And remember, this is not financial advice. Always do your own research before investing. If you found this analysis helpful, don't forget to like, subscribe, and hit that notification bell. More deep dives coming soon.